Commercial banks have been challenged to give credit access to the private sector to grow the country's economy. This, as economic analysts also pointed out, that reviewing Kenya's debt portfolio was key to economic growth. Faisal Ahmed has details.
Once again, the National Treasury's steep borrowing of commercial loans was in focus at another Economic Outlook Forum. World Bank's regional analyst Peter Chacha reckoning that a relook at the borrowing trends will spur growth.
Currently, there is a lot of liquidity out there, and globally, interest rates are going down. And so there's an opportunity to make use of debt to be able to advance some of the infrastructure gaps that economies have.
But it's not only rethinking the costly loans that would line up Kenya for the growth. Payment of pending bills by the national and county governments, as well as improving business environment, were also cited as panacea to growth.
Whatever choices you make, we live in an environment, and sometimes we blame the political part for it. That's the reality. People have expectations that if you're telling us that we're growing at 5, aiming for 6% or whatever number, we'd like to see that knock on us. And it hasn't been.
In its outlook, NCBA Group pegs the 5.8% GDP growth to more government spending towards the Big Four agenda and favorable weather conditions in the second half of the year.
We cannot reasonably expect to grow ourselves out of our fiscal imbalance, but a more productive economy will ease the trade-offs that we face.
Most of the 2020 economic outlooks have predicted a 5.6 to 6.2% range in the Kenyan economic growth. These projections, however, putting growth of SMEs at the center. Faisal Ahmed, Citizen TV, Nairobi.